Hello, and welcome to the Biomass Magazine podcast. I'm your host, Anna Simet, and I'm here today with Andrew Eastman, who is Senior Counsel at Husch Blackwell. Andrew, thanks so much for joining us today.
Thank you, Anna. I appreciate it.
Absolutely. So I think let's start today by having you tell our listeners a little bit about Husch Blackwell and your experience in biogas and RNG.
So Husch Blackwell is a national law firm. We've got about 800 lawyers across 20 offices or so nationwide. And within our firm is a group that we call Energy and Natural Resources, or ENR. And ENR is dedicated to really green energy development and green energy projects and financing and transactional work. And within that ENR group, there's a team dedicated to biofuels and biomass and biogas projects. And that's what I do. And we specialize really in representing biogas and biofuels and biomass developers throughout all stages of the project life cycle, sort of from concept up through initial financing, up through commercial offtake, rather commercial operation and offtake, and then in transactional matters as well.
Mm-hmm. I bet you guys have been busy lately.
busy and then some. And
yeah,
I think with the enactment of the Inflation Reduction Act, that's only going to increase. So it's a good problem to have.
No doubt. So we're here today to focus a little bit on contracts. So why don't we start with you telling our listeners a little bit about the contractual fundamentals of a biogas project?
Yeah, of course. So any biogas project requires a couple of sort of backbone foundational contracts to get off the ground and going. The first has to do with land rights. If you're going to go build a project someplace, you need the rights to be on that project site where you're going to build and operate. And those agreements usually take the form of a lease or a license from a landlord, and also a complementary easement agreement. That's the thing that lets you and your subs and your agents and your contractors be on site there. It also lets you get across adjacent land and neighboring land for purposes of interconnection. Those are the two things that sort of get you up and running. Once you've got those in place, the thing that really needs to fall into place next is your gas rights agreement or your feedstock agreement. So if you're dealing with a livestock project, this is going to be probably a manure supply agreement. If you're dealing with a landfill, it's going to be a gas rights agreement. If you're dealing with a wastewater treatment plant, it's going to be a comparable agreement. And this is the thing that gives you the rights in either the gas that you're going to upgrade or in the feedstock from which you're going to make the gas that you're going to upgrade. Those are really the three foundational agreements that are sort of the basis for any biogas project.
Okay, got it. So what are the basic contracts that every biogas project needs in order to get started?
So you'll need those three. Once you've got those three in place, the next thing you're looking for is probably an offtake agreement. The thing about the offtake agreement is it really shouldn't be longer than your gas rights or your feedstock agreement. Really for the simple reason that you don't want to be stuck in a position in which you're obligated to sell gas for a longer time than you have rights to receive or generate that gas. When you've got those four contracts in place, your land rights agreement, probably a lease or license and an easement, your gas rights or feedstock rights agreement, and your offtake agreement, you're in pretty good shape to go get financing for your project. Those are the things that most lenders, most investors, most financing parties are going to be looking for.
Got it. Okay. What's the financing environment like right now for biogas projects?
It's really broad. There are a lot of financing options, and the one that works best for a developer or a particular project really depends on the priorities of that developer or that project, as well as their commercial needs. So we used to see a whole lot of traditional project finance, sort of lender lending per project. More and more, we're seeing projects developed and transacted, bought, sold, acquired, divested in fleets. So 5, 7, 8, 9, 10 projects at a time. When that starts to happen, we see institutional and strategic and economic investors looking to get part of that fleet. And so more and more, the way that we see them doing that is through joint ventures. Joint ventures got some great features for a developer. The primary one probably being that there's no debt service to worry about. And it's also a way of sort of spreading risk and reward between developer and investor.
Right.
We've seen these investors either being strategic investors, they're industry participants, and they have an interest in biogas or in capturing a biogas supply or in developing the industry, or purely economic investors. They're not necessarily biogas industry participants, but they like the returns and they like the market landscape. So we're seeing that joint venture structure that invests in and owns and operates projects more and more commonly. The other things that we tend to see are bond finance. We used to see a lot of tax equity finance. I think that's going to change dramatically under the Inflation Reduction Act that provides for things like direct pay credits that is going to make traditional tax equity, I think, a lot faster and simpler. And then we see just old-fashioned debt as well. Other than in the context of a joint venture, the capital stack for any particular project tends to be really a combination of all those things sort of in varying percent.
Good stuff, Andrew. So prior to our podcast, you mentioned that there's a trend in biogas projects getting financed through joint ventures with major investors. Can you tell us a little bit more about that?
Yeah, that's this concept of financing through joint ventures. And usually the way that works is that a developer will sign up a number of projects and get the contracts in order. Those are those real estate contracts, feedstock or gas rights, and maybe even an offtake. And when those things are put together, and if you've got a couple of projects that have those things put together, you've created really an attractive portfolio for investment. And so that attractive portfolio will bring in either typically strategic investors, somebody who's in the industry and wants to finance this fleet of projects, or economic investors, those who are purely interested in the economic return and the market landscape. And the way that the joint venture typically works is that the developer will take this group of projects and contribute them to the joint venture in exchange for a negotiated equity stake in the joint venture entity. The investor then will come in and put in some money, and that's essentially the development money and the operating money in exchange for its own equity stake in the joint venture. And so this really aligns interests well between financing parties and developers. The better the projects do, the better both the parties do. They share the risk, they share the reward. The developer knows that it's not going to have any debt service coming, although depending on how the JV is set up, maybe there are capital calls. But for the most part, this is a way that developers can give away some upside, but in exchange for quicker and easier financing and without having to worry about debt and interest. So we see that more and more, and I think that seeing that more and more is really sort of a sign of the times that big and serious investors are really interested in being owners and operators as well, because they got a lot of faith in the industry. So I think we'll be seeing a lot more of that.
Exciting times in biogas and RNG, Andrew. Before we wrap things up, is there anything else that you want to add?
Yeah, I think, if I could add one thing, we expect that the Inflation Reduction Act is going to be just a tremendous boon to biogas production and biogas project development. It's got a lot of incentives, a lot of tax credits, a lot of production credits, and a lot of benefits available to biogas developers. So that's something that we're working through with clients and helping them capture all the available credits and benefits out there. And I think, that's really just going to be wonderful for this industry. And we expect to see a ton of new projects coming online because of that.
Exciting. Andrew, thank you so much for speaking with us today and sharing your expertise.
I appreciate the opportunity. Thanks for having me.
Absolutely. And for listeners, thanks so much for tuning in. Please reach out to me anytime if you're interested in being a guest on the Biomass Magazine podcast. And with that, we'll wrap things up. Be well and have a great day.